The key is to keep it simple when you're looking at a deal, whether it's real estate or a business or a company, whatever it is. When you're evaluating a deal and looking at the finances and underwriting and things like that, just keep it simple. It's income and expenses. It's dollars in, dollars out. So if you're looking at one house, you've got rent coming in and your expenses going out, or your taxes, insurance, maintenance, things like that. It's pretty simple in terms of what the expenses are that you want to calculate before you understand what your debt service is. Then you got to be able to calculate the debt service and understand what the financing is going to look like, so that you can find out if the property will support itself and have the appropriate debt service coverage ratio, which means enough net income to pay the debt service. Same thing with a company. It's all about ROI on investment. You want to make sure that you are able to evaluate what's the net income of the company, what's the net profit of a property. So don't be intimidated just because it's a big deal. It's the same thing. No matter how big the deal is, there's income coming in. It may be spread out over different revenue centers, different sources, and there's expenses going out, which again could be spread out over different departments, different expense line items. But they are what they are. It's income and expenses. It's not complicated. You just want to make sure that you account for all of them, and you can verify that and back that up with tax returns, profit and loss statements. You can look at the assets of the properties and the businesses on the balance sheet. So you just need to understand what those things are and how to best account for them, and make sure that you verify all the income and expenses and keep it simple. Dollars in, dollars out.